classic MACD plus EMA plus ATR trading strategy for scalping Forex. I have tested the classic MACD, EMA, ATR scalping trading strategy with Euro and USD dollar pair using 5-minute candles with data spanning over 20 years. I have optimized the best ATR multiples for stop loss and take profit targets. I present optimization results for the best system quality number, SQN. Finally, I retest every year using the optimized parameters. Also, I provide an evaluation of the results. The strategy. For long positions, buy when price is greater than EMA 200, MACD and MACD signal are less than 0, and MACD crosses over MACD signal. Close the position when stop loss at a certain multiple of ATR, for example 2, take profit at another multiple of ATR, for example 3. For short positions, buy when price is below EMA 200, MACD is above 0 and MACD signal is above 0, MACD signal crosses over MACD, and close the position when stop loss at a certain multiple of ATR again, for example 2 again, and take profit at another multiple of ATR, for example 3 again. The optimization. The optimization is based on finding the best values for which multiple of ATR, of stop loss, and take profit for long trades and short trades. The optimization based on the highest system quality number, SQN. Optimization results. In this heat map, same multiples of ATR for stop loss and stop loss short are used. NSL is used for both short and long positions. We see that stop loss 5 and take profit 2 times the ATR gives the optimal SQN. We also see that for stop loss 1 and take profit 4, 6 and 8 also give high SQNs. Backtest results. NSL 5 and TP2. The results show we almost tripled buy and hold. Our exposure time was only 40%. We made 14,500 trades in 20 years. The average trade duration was about 5.5 hours. Our win rate was slightly less than 50%. NSL 1 and NTP 4. Return percentage and win rate is lower, but exposure time is also significantly lower. We made half of the original 5 and 2 multiples, but we were exposed to risk quarter of the time compared to that. We still beat buy and hold. NSL 1 and 6, you can see the results here, very similar to NSL 1 and 4. NSL 1 and 8, again very similar to NSL 1 and 4 and NSL 1 and 6. Example trades. The chart here shows the prices for Euro and US dollar. This part shows the MACD, signal and histogram. To see clear examples of the trades, I wrote a Pine script translating the trading strategy I tested. Here you can see the script. Now let's look at the chart. The red line is EMA 200. The orange and blue lines are 2 times ATR for take profit and 5 times ATR for stop loss for the long positions. The black and green lines are the stop loss and take profit for the short positions. Here we enter the long position because the MACD line crossed over the signal line and both were below 0. Then we exited this trade when the price went over the green line, the trailing take profit 2 times the ATR. And here we took a short trade because the signal line crossed over the MACD line and both were above 0. Backtest results with other periods. NSL 5 and TP2. This is the data for the best SQN. The stop loss is 5 times the ATR and take profit is twice the ATR. The difference column shows the difference between return and buy and hold percentages. It is a measure of relative return. And this is the bar plot of the return, buy and hold and difference percentages. As you can see, the difference is usually high, both when we win and when we lose. But we won more often than we lost. We have 13 positive difference and 8 negative difference years. We see that in 6 of the 21 years, the return was positive, whereas buy and hold was negative. In 4 of the 21 years, the return was negative and buy and hold was positive. NSL1 and NTP4. This is the data for the second best ATR that we obtained from the heat map. This time the stop loss is equal to 1 ATR and take profit is 4 times ATR. And this is the plot for the second pair of ATR values. It is very similar to the previous one, except the percentages of difference and return are lower. And this is the comparison plot of the first and the second set of ATR multiples in terms of the differences. The red is the 5 and 2 and the blue is the 1 and 4 for stop loss and take profit respectively. As you can see, most of the time, the red is greater than blue, both in win and lose. Evaluation. The 50% win rate is not impressive. The return is good, but when it's cumulative. We see that we have lost money compared to buy and hold in 3 and 2 consecutive years. So I think we can say that classic MACD plus EMA plus ATR strategy is mediocre at best when used with Euro and USD pair. Thanks for watching. Please like and subscribe.